Welcome back. You're watching NSE FinWiz powered by CNBC TV 18 Season 2. Asset allocation, which is again a very important bit. But people very often are confused what asset allocation means and how to go about it. So if you could shed some light on that.
If you have money, you can either spend it or invest it. What is the difference between an expense and an investment? Expense is gone forever. Investment, you have some expectation from it that it will come back to you, right? Dividing your money in different categories of investments is called asset allocation. Okay, if I buy myself a pair of jeans, it's an expense because I don't expect it to sell for 4 times the price unless I was Shah Rukh Khan, right? I own it, so it's going to sell it for. So that's an expense. So anything which is an investment, there are different places to put your money, right? Not just one. So you spread your money between different places where you can expect so many people, so many investment asset classes to give your money is called asset allocation. As the name suggests, different asset, you allocate your money, it is asset allocation. Now, why is this a very, very important thing? Is because this brings down your risk significantly. Because if I just put all my money in gold, you really don't know when gold will falter. So whom do you fall back upon? You don't have anybody else to fall back upon. So asset allocation actually, so if I would have seen a lot of portfolios in the past, the key distinction of a good portfolio, okay, if you ask me, which is the one common thing amongst all the best successful portfolios, it has been that they would have spread their money across 4 or 5 different asset classes.
Harsh, I want to ask you something. What are some of the common hurdles, some of the common missteps that, layman investors fall for when they start investing?
So, I mean, there are some pretty common mistakes that most of us make when we start. And I think if we know about them, we probably will not do it. And I think if I was to shortlist one of them, okay, I would shortlist what I would call the disease of maximizing my return, right? Okay. Now, I have started out investing. I thought I was smart, so I said, okay, I need this money after 10 years, so I'm going to do this systematically, right? So I planted a tree and I know I need the fruit after 10 years. I'm watering it, I'm doing everything right. So that's all the right things that I did. But then what I do, every day I take it out and see, is it growing? No. So I keep it back. Is it equities take time to give returns. Right. Equities are going to go up and down. But one thing has been proven by past track record, that if you have invested systematically for at least 10 years in equities, you have made money. Okay. So over long term, all these things go, they equate themselves and you get a nice, good return. But unfortunately, most people, because they keep watching it, okay, they're damaging their return and then they typically tend to quit when it is at the lowest. They say, oh, this strategy doesn't work for me. It works for the rest of the world, but it doesn't work for me. See, I made a loss.
So IPO are the in thing today. So what should we look at before investing? The ratings which are being given or the EPS figures or anything else which they provide?
See, what happens is, IPO, first, once you have a financial plan, a direct equity stock is a part of it. You need to remember that's going to be a part of a big plan. As long as you can keep telling that to yourself, because what happens is, people get carried away with one specific, it's an asset class in itself, I would say, IPOs, right? Initial listings. Now coming to the specific question which you've asked, what should somebody look at? See, anytime you buy something, you need to check the value, right? Be it whatever you're buying, you need to check the value. Value is very clearly exhibited by why are you paying money to buy that stock? Because the company is earning something. So you need to check if it's earning X rupees, how much am I paying for it? That's the price to earning ratio.
You just mentioned about asset allocation, and I've just started a job 2 months ago, not yet exposed to the markets and all. So I would like to know what are the various streams in which we can allocate our money and which would pay off better and early.
Absolutely. Very good. See, one big misconception is markets and finance is same. Markets, generally people think finance means stock markets, right? So when you say finance, finance is a far larger group of stuff, right? And markets is a subset of it. Now coming to the question which you asked is what are the assets I should look at, right? See, today if you look at the contemporary situation, equities are poised to do very well in this country. And there is reason enough to substantiate that. Okay, what do you mean by equity? Is being a partner to somebody is called equity, right? If you lend to somebody, it's called debt. Okay? So if there is a business which is running, if you say I want to become this business's partner, what are you trying to do? You're trying to buy its equity. If you buy its debt, what does it mean? It says that I don't want to know what your business you're doing. I'm only lending to you. I want my money back. So equity and debt are a large two components of capital markets. Why are they called capital markets? Because companies raise capital from these two markets. So if you become a partner, it's equity. If you lend to a company, it is debt. Then you have these conventional asset classes, gold, real estate, commodities, okay? Of course. Now, coming to gold, okay? Gold is one of our favorite asset classes. And I can't stop telling you how much I hate it. Why? Okay? I'm just trying to make a stronger statement so that I can get your attention. See, everybody owns gold, right? But if you look at gold, if I told you, if India was, not if, India has been for the last couple of decades the largest buyer of gold in the world. If India has done anything different, it is buying gold for the last 2 decades as the largest user of gold. Why are we not the richest in the world today? If we have done this decision for the last 20 years. Point to think, right? And I'll tell you why. Okay? We've been buying gold, and how much gold? Let me tell you. If there are so many countries in the world, if you leave the top 4, we are the top of course, if you leave the top 4, the rest of the world, how much ever the rest of the world consumes is how much India consumes. That's the magnitude of consumption, not for a year, not for 2 years. If we were so good in actually having chosen this asset class, we should have ideally been one of the richest countries. Understanding these assets is very critical, okay? There is no other asset class which would have done so badly, even after giving it 35 big years, okay? 35 years, in 79 to 2014, the performance has been 2.2% a year in dollar terms. But we still like it because it is quoted in Indian rupees.
I want you to also come in on this point because there is an equation that people talk about, 100 minus your age should be invested in equities and the rest can be in other assets. So kind of basically asset allocation there itself. But is that a ratio to work by or how does it work case to case?
So, okay, if I was to answer Akshita, I would answer it a little differently, okay? All that I would say is, logically, you've just started work, right? It's still not very clear what you need money for, when do you need it. It's still not very clear. To most people your age, it's not clear, okay? I think at your age, till you figure this out, at your age, what is more important is getting habituated to investing. And what we like to tell our clients is treat what we call the 80-20 rule. 20% of your income is not yours. Take that out. If your income is 50,000 rupees a month, treat your income as 40. That balance 10 needs to be invested month after month after month.
Well, it's time for a very short break here on NSE FinWiz powered by CNBC TV 18 Season 2. We'll be right back.